Rockdale analyst Dick Beauvais, in a note to investors last week, wrote that Goldman Sachs is unlikely to face charges from a Senate investigation of its practices in the mortgage market, and that, quote, a terrible wrong may have been done to Goldman Sachs. Well, our friend Bill Cohan is steadfast in his analysis. Goldman saw trouble coming in the mortgage market and bet against it. Bill is a Bloomberg contributing editor, and he is the author of Money and Power: How Goldman Sachs Came to Rule the World. Bill, you address this point in your book, Goldman Sachs being net short in the mortgage market, but now it seems like you're on a crusade. What's going on here?
Well, I just like the facts, and I like to have the facts lead us to the truth. I mean, it's a simple matter. What's happened is, of course, that Senator Levin laid out all of the documents. I went through the 900 pages of documents, talked to people involved. It's quite clear that Goldman bet against the mortgage market. They were net short the mortgage market. They may, yes, have been hedging their longs, but they ended up being net short. The desk that did that made $4 billion for Goldman Sachs. Goldman, in 2007, made $17.2 billion pre-tax. There's no question about this. However, Goldman has been on a campaign recently to try to get people to rethink about what it did.
Well, you haven't changed your view because you've been on. No, not in the slightest.
No.
However, Dick Beauvais, this is a very abrupt about-face within a month's time. What do you think is going on?
Well, I talked to Dick over the weekend, and so we had a nice chat. I mean, I think remember, when the Levin report came out in April, Dick saw it, and since Goldman didn't refute any part of it publicly, Dick said, okay, this is trouble. He put a sell rating on the stock.
One of two analysts.
One of two analysts. Now, a lot of that was related, as he correctly points out, to the fact that their business is not doing as well. I mean, they're not going to make the earnings that people had thought. So that's one reason for sell. But another reason is because he just felt that perhaps there might be some fire along with the smoke that Senator Levin was talking about. Then, you know, he like a number of people on Wall Street and in the media, began to hear from Goldman and hear Goldman's side of the story. First, it started with the Journal writing that Goldman was going to push back.
Basically, Goldman got to Beauvais.
Goldman, you know, quote unquote, got to Beauvais, and Beauvais said, you know what, maybe there is more to this. Maybe there's another side to this that Goldman hasn't articulated yet. Now they're articulating it, so now maybe I reacted too quickly.
Well, we're talking about several things at the same time. We should be clear about that, right?
There's a lot of things conflating here at
once. On the one hand, whether or not Goldman was or wasn't short. On the other hand, whether or not Goldman told the truth, right, to Senator Levin in that subcommittee hearing. Right. And finally, whether or not any prosecutor, criminal prosecutor, ultimately brings a charge against the firm or any of its executives.
Right, exactly.
So you're advocating for all three or one only?
No. There is no question Goldman saw trouble coming in the mortgage market and made call it a hedge, call it a proprietary bet, whatever they did, they alone on Wall Street made a big bet against the mortgage market and made a lot of money, billions of dollars, which they used to offset any losses that they were going to have. And the result was they made billions of dollars when everybody else lost money.
When their clients lost money.
Oh, yes, their clients lost money. They continued to sell mortgage-backed securities at the same at par, at the same time that they were betting against mortgage-backed securities through all series of proprietary bets. They made out in terms of billions of dollars. Now, that's number one. There is no question about that. The documents are clear about that. Even Goldman says that at the moment. Now, they call it a hedge. They don't call it a proprietary bet, all of these things. But there's no question about that. Now, whether they lied to, you know, Levin's committee, you know, I would never be...
Perjury is hard to prove.
Perjury is hard to prove. You know, Lloyd Blankfein is a Harvard Law School graduate, a lawyer at Donovan & Leisure when that firm was still around before he went to Goldman. I think there's a remote chance of that, and I would not be an advocate of pursuing that. I don't think that's what happened. They're too smart for that.
Bill, you've been close to Goldman Sachs. For your book, you spoke with pretty much every living leader the firm has ever had. True. So how is it that, given the fact that you have so much experience with the firm, how is that Goldman is having this success, quote unquote, getting to people? Whether it's Dick Beauvais of Rockdale, whether it's Andrew Ross Sorkin of the New York Times, whether it's Jeff Hart of Sandler O'Neill, whomever, it doesn't really matter. Why are they persuasive? Is it because all of a sudden people feel sorry for Goldman Sachs? They've been beaten up too much, now it's time to be their friend?
Well, there is a little bit of that arc of that narrative with media outlets in general. I mean, every case is, of course, different. But yes, I mean, Goldman was beaten up for so long for the last 2 years that now it's time to say, hey, maybe we've overreacted. And I think there was some overreaction. I mean, claiming that they were perjuring themselves. I mean, I think Levin, definitely crossed the line in terms of, claiming they were these huge net shorts when ignoring the fact that they had these longs. But the fact of the matter is that, yes, Goldman has now started to show around to the media and to research analysts its analysis, and people are saying to themselves, maybe Goldman's onto something. But, Erik, I've been through the 900 pages. I've talked to all the people involved. There's no question that they had this net short on. David Vineyard, the CFO, even refers to it as the big short. So there's no question that they had it. They made billions. Everybody else lost money. So the facts are the facts. Now, I don't think they perjured themselves. I think it's time to move on, things like that. But, let's just be clear about what happened here.
Bill, always good to have you here in the Inside Track. Bill Cohan.